Greetings, everyone. Welcome to the weekly wrap-up here at the Liberty Call. It is Friday, January 27th, 2023. Hope everybody's had a fantastical week out there in the interwebs. It is a sunny day here in Colorado. It is a balmy 45 degrees outside, according to the computer here. Still hasn't melted all the snow in my front yard. It is still quite white out there. So if anyone wants to come by with a shovel, you're welcome to help me out and clear some of the snow. It hasn't been warm all week. I mean, this is the first day this week we've had above freezing. So the snow on the driveway is still there. So it's a bit slippery. So anyways, if it's your first time watching, please give me some thumbs up, likes, shares, subscribes, follows, all that good stuff. Share with some friends and family. I would greatly appreciate it. And let's go ahead and jump into the numbers and see what's going on today. All right. Dow Jones was pretty much flat today, up 0.08%, closed at 33,978. SP 500 was up 0.23%, closed at 4069. NASDAQ was up 0.95%, closed at 11,621. Small caps are up 0.64. The VIX fell 1.17% today. It's currently holding at 1851. Canada was up 0.07. Brazil down 1.52. Mexico down 0.8. The European markets see mostly green here. Germany up 0.11. UK up 0.05. France up 0.02. Euro Stoxx was up 0.1, Netherlands was up 0.46, Spain up 0.27, Italy up 0.83, Switzerland up 0.13, and Portugal fell 0.42% for today. Russian exchanges were in the green today. The MOEX up 1.04, and the RTSI was up 0.66%. Let's see here. It looks like most of the Asian markets were still closed due to the holidays that they've been having over there. But Japan was up 0.07, Australia up 0.34, New Zealand was up 0.21, and the only market open in China was the Hang Seng, and it was up 0.54%. So that's everything for today. Let's take a quick look and see. Oops, clicked the wrong thing here. Let's take a look and see how the markets did for this week. Starting out with the SP 500, looks like it's going to finish the week off up 2.56%. Dow Jones, let's see here, looks like it's going to finish off up about 1.54%. NASDAQ, it's going to finish the week off up 4.38. The Dow Utilities finished the week off up 0.93. And the Dow Transports up about 0.73. So looks like NASDAQ was the big winner for the week, but all in all, not too bad for all the indexes across the board. Let's go ahead and take a look at how things are going. The trend right now, starting at January 3rd or 4th of last year, we've been in this long-term downtrend. We can see the resistance line here, and on a number of occasions we bumped up against it. This is the first time we've really seen a breakthrough of this line of resistance here. So, could this mean that, we're going to, this is the bottom and we're going to break out of it? Could be, maybe. But my guess would say we'll probably fall again here in the near future and, line back up with the rest of this downward trend. But again, it's right now just kind of a wait and see on what's going to happen there with that. All right. Well, let's go ahead and go through the economic data that came out this week. Starting out with jobless, initial jobless claims came in at 186,000. Forecast was 205,000. Last week's number was 192. So dropped a little bit from last week's number. And again, over the last few months, we were in the low 200,000s for quite a while through the fall of last year and early winter, and we've been actually dropping here the last couple of weeks, which again, that's good news. The economy is still hanging in there, but again, you do need to remember that jobless claims are a lagging indicator because typically companies start to show a lot of red on their books, and that's when they say, hey, we got to get rid of 10 or 20% of our workforce. Continuing jobless claims came in at 1.675 million. Forecast was 1.659 million. Last week's number was 1.655 million. So we went up, I think we covered this in yesterday's articles, by about 20,000 from last week to this week. But again, looking historically, we're doing real good right now on the jobs numbers, even after, usually January is where, you kind of get rid of your seasonal staff. You have a lot of turnover at that time of the year. But, jobs numbers are still, and probably a lot of employers are just hanging on to people because, they don't know where things are going next. Next up, the Composite Purchasing Managers Index came in at a 46.6, still below 50, which is a sign of contraction, but it did increase from last month's number of a 45. GDP, the first number for Q4 came out this week. We had a quarter that came in at 2.9% in the positive. Forecast was 2.6. Last quarter's or third quarter's number was a 3.2, so we did retrace a little bit there. But again, still some positive news that we ended the year. Remember last year, the first two quarters were in the red, which is a sign of recession. Q3 and Q4 appear to have been in the positive. So are we out of recession? Are we going back into recession? A lot of the smart people I read seem to think that, the recession is really going to hit this year. My friends at First Trust, Brian Westbury, I've covered a lot of articles about that over the last few months that, 2022 will be kind of a so-so year, and then 23 will just be awful. That's kind of what their estimates are right now. All right, durable goods orders month over month came in at a 5.6% number. Forecast was 2.5%. Last month's number was a negative 1.7. So those did jump quite a bit from month to month. New home sales came in at 616,000 under the forecast of 617,000. Last month's number was 602,000. So we did have a little bit of an increase, and looks like the bottom was August of last year, and we've slowly been creeping back up on the new home sales. So maybe people have, after the interest rate shock of going from 0 to, 4.5, 5, once people have gotten past that sticker shock and have had to adjust what they're buying and selling, maybe that's a good sign there that the housing market's starting to rebound. The consumer sentiment number came in at 64.9. Forecast was 64.6. Last month's number was a 59.7. So pretty decent jump in sentiment. But again, that's just, how do you feel about things right now? So, all right. So that's everything there. Gosh, I got something in my eye. Don't you just hate that? I know I do. Now my eye's going to itch the rest of the afternoon. All righty, so let's go ahead and get to the market recap for today. S&P 500 marches higher as cooling inflation cements Fed downshift bets. All right, let's go ahead and read through a synopsis of this. Yes, S&P 500 climbed on Friday as further signs of easing inflation supported bets that the Federal Reserve will downshift to a slower pace of rate hikes next week. The Personal Consumption Expenditures Index, or the PCE index, rose 0.1% in December, slower than expectations for a 0.2% rise. Core PCE, which excludes food and energy, because again, who eats or drives, and is the Fed's preferred inflation measure, rose 0.3% in line with expectations, though slowed to 4.4% for the 12 months through December from 4.7% previously. This led to expectations that the Fed will hike rates by a quarter of a percent rate hike next week. Treasury yields, however, continued to trade above water amid expectations that Jerome Powell will continue to talk up the prospect of higher for longer rates in the press conference that follows the monetary policy decision. Consumer discretionary was among the biggest gainers, inspired by a more than 9% rally in Tesla. Wow. So that's some good news there. All righty. So, like I said, I've been saying before, right now it's kind of just, the porridge isn't too hot. It's not too cold. It's just kind of in the medium scale right now. Next up on the docket here, U.S. personal spending declines in December. Again, more signs that things are slowing down in the economy, but, that is just to be expected. Let's go ahead and breeze through a little synopsis of this. Data from the U.S. Commerce Department has shown that consumer spending contracted in December, possibly indicating that rising inflation and interest rate hikes by the Federal Reserve may be affecting demand. Personal spending dropped 0.2% in December, followed by a downwardly revised decline of 0.1% in November. Meanwhile, the Federal Reserve's preferred measure of inflation, core PCE price index, which strips out the volatile things like food and energy, ticked up to 0.3% from 0.2% in November, in line with estimates. The annual rate moved down. Yeah, we already covered that in the previous article. Also meeting expectations, but remaining well above the Fed's 2% target for price increases. So looking at this, things are more expensive, so people are spending a little bit less. Next article up has to do with savings. So maybe people are saving more. I'd love to see that because I was reading an article earlier where a woman is 72 years old and has a TikTok video where she can take donations for her retirement. So hopefully people don't have to resort to those sorts of things. But let's go ahead and read through this. U.S. savings rate jumps to 7-month high on cloudy outlook. All right. The U.S. savings rate in the U.S. rose to 3.4% in December, the highest levels in 7 months, according to the Commerce Department. This marks the third consecutive month of increase and the biggest jump since July of 2021. This trend is a reversal of the steady declines in savings that occurred in the second half of 2021 and early 22 as the economy reopened and Americans started spending again on services such as restaurants and travel. The decline in real personal spending last month was mainly led by goods categories, while services spending stagnated. Experts are predicting a cloudy outlook for consumer spending as eroded personal savings and increased reliance on credit point to a weak consumer spending this winter. So again, from the previous article, we talked about where, spending was down, and in this article, we're saving more. So again, maybe my hope that people are actually saving a little bit more instead of just wasting it or running up their credit cards. Not a good thing. All right. Last article here comes from Mises Wire, written by Ryan McMacken. It's titled, Raise the Social Security Age to at least 75. So let's go ahead and read through a quick synopsis of this and see what he had to say. The French government recently announced plans to raise the retirement age from 62 to 64, which would mean that after 2027, workers in France would have to work 43 years to qualify for a government pension instead of 42. And I know some of the articles that I was reading, people were freaking out. Oh my God, I got to work an extra couple of years, 2 more years. That's crazy. Well, in America, we have a much bigger problem. We have a lot more people, and we got a lot more people who are wards of the state that we have to take care of. So it's going to be a tough thing. All right, jumping back in. This change is a response to the demographic problem that France, like many other Western countries in Western Europe and North America, are facing. As the population ages, the demand for public pension funds increases while the younger working age population is shrinking. In the U.S., the federal government also faces huge and growing obligations to current and future pensioners. As the population continues to age, the number of prime age workers stagnates. The Social Security scheme is an example of how government programs gradually become far more costly over time. The program was originally sold as a way to help those who were too old, exhausted, and injured to work at all, but now many recipients spend decades collecting benefits. Additionally, as life expectancy increases, more workers live long enough to collect Social Security, and they receive payments for longer, which inflates the cost to taxpayers. So, basically, to wrap all that up is we need some major changes to Social Security, or else I read other articles that say that the funds are going to be exhausted sometime this decade, before or sometime early next decade, the 2030. So I know Medicare is in much worse shape. So, we'll see what the idiots in Washington come up with next. But, usually it's the taxpayer who gets screwed, and the people who, promise, who hand out promises with my taxes, nothing happens to them. So, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information is there. If you want to book a meeting, drop me a phone call, or shoot me an email, feel free to do so. You can see Jake over my shoulder. He's super excited about all the financial stuff we talked about today. Hope everyone has a fantastical weekend, and I will talk to you guys next time. Adios.